Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, July 6th. Traders, the song remains the same. We continue to be in this range for over a month now, being the fifth day. Actually, it's only a couple days into July, but we are still now in July, still sideways. And you can see that I pointed out in the other videos, that's what the market has been doing, really sideways. And this is really, believe it or not, a sideways consolidation right up in here, even though we went a little bit lower. Sideways over here, and you can go through the whole chart week by week, day by day, and you could just see, you know, other than the rip into November, we were sideways all the way, way back when, going back to July, all the way up until November, months and months of just sideways consolidation until the last rip up. So that's what the markets have been giving us, and unfortunately, we do not have the power to change it. We have to wait. I do think that we're still on our fifth and final leg up. We've been talking about this for the last couple of months now, since we did the map of the market and where we are in this final and fifth leg up. So market continues to be sideways. We do have a doji on the ES. And you know, the highs, yesterday's highs on all of the indexes that I'm going to show you are going to be important. So we need to really start breaking out. Now the transports have been doing well. Russell, very sluggish, poor type of trading, very low volume. However, it's still holding up within, and I'll show that to you in a moment. But ES daily continues to be the 24.39 and ultimately 24.45. Your support's going to be the TMT upper and lower end of the proprietary price channels of 24.2275, and then of course 24.0873 in red. That's for today's trade. Next is going to be the Nasdaq, and of course the NQ, I believe, is in distribution mode, but we do have rallies within, guys, right? I mean, you can see that here. We get a little pop here, they sell them. Little pop, and they sell them. Why? Well, institutions are clearly selling the Nasdaq. So they sell them for a few days, they push the market lower, and they pull away so the markets can pop just to sell into it again. Now, we are getting curl up in our momentum indicators in the Nasdaq, but again, I believe it's only going to be brief. After a while, when valuations go through the roof like that, it cannot go unnoticed. So these are your levels of resistance. Again, your support levels will be yesterday's low, and of course, ultimately, right up in here at 55.53. Okay. Next is going to be crude oil. We talked about looking for a short up in here. We didn't even get there. Well, because we had headline risk and we had headline news come out. Qatar actually producing a lot of oil again, and that sent the market in basically a frenzy. We are still positive here, so something to keep thinking about. But again, I'm not looking to short here. I want to short at these specific areas. Let it go. And if we get a retracement rally and we get taken back some of this sell-off we did today, I think the markets will alleviate and get back to the resistance areas. Otherwise, if we continue to go lower, we take out the 42.74. 40 will be a round lot number, and then next area will be 36 to 38 will be the longer-term picture to the downside in crude oil. Gold, well, I do think that gold is looking for one more flush. 1207 is going to need to hold, guys, and this area here of 1233.70. Okay, that's for today's trade. You can see that the momentum indicators are still on sell signals, but we are oversold. We could get a gap fill and then one more big sell-off, or we could just continue to sell off to 1200 and hold, and then the market would put us into a sweet spot of a seasonality trend, of positive seasonality trends in gold. GDX, same thing, just want to show you to get a decent day at the end of the day. Still outside of the symmetrical triangle, so it needs a lot more work. It's going to really need to get above 22.87 to alleviate some of this downside pressure. Okay, that would be your first area. Next is going to be TLT bonds. 123 is going to need to hold, otherwise we start to smash lower. I think both bonds are going to be lower and much lower years to come. And I do think that bonds ended a 30-year bull market run where yields have made a generational low last July, about a year ago. So I'm looking for higher yields, lower bonds, and pay attention to that 123 area. Spiders, you can see again with like the ES, 243.78 and of course 245. Your low numbers right here, 241.75. That's going to need to hold, otherwise you hit the 50-day at 240.98. Next is going to be IWM, and I opened it up, just want to show you. Really a crappy trade. I got to tell you guys, this is not one of my favorites. Matter of fact, it's the worst that I like to even think about trading unless you get a nice big pop. But look at how nasty this trade is. If we can get back above here and take out 141, Well, actually, 141 came all the way down to here, 141.80. So I'm going to get rid of that. But really, the new level is going to be 142.50 all the way up to 142.88. Okay, that needs to get taken out in the Russell. Transport's doing well. That's why I still think that there's some room here to the upside. It's going to help pull this market higher. Don't have to be at the ES 2500, 2550. Could stop at 2515, 25 and a quarter, 2530. So just keep that in mind for going forward. We do get gap support here, 172.50. Last is going to be your Qs. Again, Qs did okay today, but just back testing this large uptrend channel, which is now broken. Okay, so we're looking for another area of resistance right up in here, and then we get a failure, and then we're looking for the 135.89 again. Okay, guys, have a great day. We will see you tomorrow. And again, if anybody has any questions, comments, or you'd like me to cover a stock or an index for you, please send an email to support@tradingmarkettechnicals.com, and then, of course, I'll cover that in the next research video. Take care.